Hey traders, welcome to the nightly trade review video from Playbook Trading. Today, wanted to bring you a trade that we took in our trading room. I've been bringing this to you daily. We've been on a great streak here with earnings, and that's where we made most of our money, at least me, in earning trades. But before I get into this trade, I also want to talk about some of the things that are important as you come up for trading. It's really how you feel, how you how you set yourself up, how you're developing your market bias, how are you looking at the market, and most importantly, are you visualizing yourself how the morning will go? So I'm just going to leave you there. I'll probably do another video over the weekend to really go over the daily routine and proper mindset and what a critical and integral role that it plays in your trading to be successful. Actually, forget the training. It is absolutely critical in anything that you do. So with that said, let's take a look. ANET, it's the breakaway gap. If you are following me on Stock Twits, I talked about this actually a night before after the earnings were announced. This is also was talked to our traders that this is going to be our top watch for today. Yesterday we talked about the gaps and why. Well, let's have a look. So now we get into more of an education piece here and how to read candlestick, and it's really what we're going to talk about, how to use multiple time frames to manage your trade. All right, so this is your daily chart right here on ANET. This is a daily chart right here. Daily chart, basically what you have here is, this is a range-bound daily chart. You go to, let's call it a 180 to 150, let's call it a $30 range. It goes up, goes down, goes up, goes down, and then all of a sudden, you had 3 months of pretty orderly move to the upside, to the downside, upside to the downside, and all of a sudden, last four trading days, look what happened. 1, 2, 3, 3 bars back to back to back. And if I were to pull up, let's say if I were to pull up the charts here, and I'll bring up the charts. So like I said, if you pull up the chart, what you see here, the volume also spiked up on this move down. Now this little green bar night before the earnings did have a nice volume, and it really almost spoiled the party from a shock value standpoint. But you can't be so married to absolutely the shock value has to be all red bars. Yes, that's true, but it's not true because it's Tuesday. This is what happened Monday. Look, it's gapping over the entire weekly red candle. So multiple time frame analysis in the morning, extremely important. So let's get back to the chart, the annotated chart, and I do this every night for all my trades. So I'll bring up the chart, and there we go. So there's your chart. That's what we're talking about. Now the stock opens. Best thing can happen to you on this stock, it puts a red candle. Wide range red bar. Look at this entry, 2-minute chart. Wide range red bar, no follow through. See, no follow through of this wide range red bar. You've got immediately you have a green candle. Now you have a rest candle, and now it's setting up an entry. Here comes the alert in the room, 6:34 a.m. Right after this candle, this is a 2-minute chart, 175 by 171. Here's a $4 stop here. Boom, we're in the straight. So again, shock value, yes. Clearing resistance, yes, both on weekly and daily, new highs. There is no more resistance after that. Hourly pivot, we're absolutely clearing 1, 2 hourly pivot over this base. Short-term bullish, long-term it's bullish. Now, when you see this red bar, this is the bottoming tail that came into the base and out. That means it's not going to lay down. It's going to have a move back up. That means all these traders that have not sold these 3 days or 4 days are in money, and they're in no hurry to sell. all these traders that are short in stock, they're about to get squeezed. So here we go. That's where it triggers. Now it comes the ad. Now you can't just say buy once and never look at it again. If you're following my video, lately I've been buying it here at the ad and letting go the first entry for many reasons of the chart. But today we got this adding to ANET at 6:42 a.m. That's almost 8 minutes later. So 2, 4, 6, 8. Big green bar, little rest bar. Pay attention to that rest bar. I want to go above that. That's my ad. Adding to 178. I'm bringing stop to 173.50. Now I am, obviously keeping the integrity of the risk unit. Boom, we're in this trade. Now we're turning in. It's about 10:25 market time. I'm on 5 minutes chart at 5 minutes chart. In 5 minutes chart, I changed from 2 to 5. 5 minutes chart. The traders that trade on a 5 minute chart, and I'm gonna walk you through. This is probably going to be one of the most informative and educational videos that you have probably came across, and there are many, and they're guys that do a really good job. So I'm not putting anyone down, but I have my own style, so hopefully you can learn. So here we go. So that was the 5 minute chart. 5 minutes base breakout. This is the 5 minute traders. This is like ultimate. Look how tight this is. It's 180.50. I call it one. I want to do 180 and then move the stop right over here. And here's what it looks like, right? We move the stop right up here. 180. I'm now 181. Sorry, at ANET at 181. Stop to 177.50. And that's where the ad is happening. Like I said, this is a 5 minutes nirvana here. Boom, right here, right up here, 181. Yeah, 181, and the stop 177, which is right over here. Now we're in 177, so we're in. Now, 5 minute chart done. It's a beautiful uptrend all the way here. I mean, honestly, you don't have to get out until the uptrend is broken, and I can do a video, the proper trend lines and all that. But guess what happens? The 5 minutes breakout happens to be 15 minutes opening range break. Remember that 181? That's exactly what it was. And then you had a little bit of a rest. First time for the 15 minute trader to reconsider that trade, and boom, and then double top right here. So using multiple time frame analysis, using how things work, can really help you yield better, bigger results, and allows you to stay in the trade longer, manage the trade better. I mean, like this trade is right here, and this is really the first red bar that broke the trend, and that's where you take targets. Now, I was in this trade 100% honest. I got out of this trade way too soon. It went to 190. I got out at around 185-ish. Now I was in 2 accounts. I was very clear with the room. My intentions with this. I was in this trade with the 300 shares here on this trade. One ad, that's one ad here, and then another ad. First entry, second first ad, and the second ad that I just showed you on the 5 minute chart. So there's 2 at $100 each entry. Maintained the $400 risk. Didn't go away from it. Now the third time that we entered the trade, we were actually in a little bit of money, so that trade was financed by the first trade a little bit. But also I've traded in my swing account as well, and I held it overnight. I don't know wherever it closed at 186, or 186 is 6-ish, and it went to 190. I believe this has room to run, because this, if I were to say similarities, it has similarities with Roku. So let me show you the Roku chart, and then let's call it a night. So Roku chart, look, this was a breakaway gap. The only difference is Roku is right off of a lot of room to move here. Even on the bat tape, Roku did pretty well here. So hope you've enjoyed this, and you having a great week of trading. Have a great rest of the night, and I will talk to you guys tomorrow.